Alright guys, in this video I'm going to go over what I consider to be, I would say, it's obviously I have a biased opinion because I've been using it, but in my opinion the MACD is one of the most, if not the most, incredibly powerful indicators to use in your trading. And whether you're trading support and resistance, or you're trading moving averages, or whatever the case is, I know we're always on a quest to try to find what a leading indicator, what's going to give us the heads up that the market might either turn around or the market's going to, continue in the current trend or whatever the case is, right? And it kind of brings me back many, many years ago. I tried so many variations of indicators. I've tried the stochastics, tried RSI, the MACD I've used back then. If anybody knows what the tricks indicator is, or I'm trying to think of some others. I tried so much shit out there over the years, and believe me when I tell you, I've tried almost the most craziest combinations of indicators because I was so, I guess you could say, desperate to find what is the perfect indicator to use. And if you're a new trader right now listening to this, or you're, more or less an intermediate trader, you've been trading for about 2 years, 3 years, and you're still trying to find your way of what tools to use in your trading. What it's going to help you, give you a heads up in the market, because that's the idea. We always want to try to get to uh, the ideal turnarounds in the market. And I know they say, you don't want to buy at the absolute top. Nobody can predict what's going to be the absolute bottom. No one can predict what's going to be the top. And again, I've tried so many different things. I even tried what people refer to as naked trading, where you don't have anything on the chart. It's just strictly price action. And that's not a bad strategy. I mean, it's fine. Some people feel that, that's all they need. They just draw support and resistance levels, and they're fine with that. I traded that way, and I do agree to a certain point that you can trade that way, but I felt that there was a way to kind of give my trading that extra push to try to figure out what would be, what would give me the indication that the market was stalling, or the market was, about to make a major moves. Now, one of the things that people get wrong about the MACD, you guys can see it down here, is that I guess there's various ways to use it or interpret the way the MACD moves. Some people use a crossover. Some people they use the zero line right over here. They try to use, if I blow this up, they try to use this little zero line to indicate that if the MACD is below this, then it's bearish. If the MACD is above it, it's bullish. Okay. In my experience, it just didn't flow with what I was trying to do. I was looking for big swings in the market. I was looking for 200 pips plus. And if you guys take a look at the video I did on trend lines, you guys can look. I went in depth on how to use those trend lines to your advantage, and really, try to get the most optimal entries and even exits, right? So I'm going to show you some trade examples that I've done in my past, and how powerful they can be used. The MACD can be used. So I'm going to get rid of this, and I'm going to start from scratch. This is a daily chart of the Euro USD. So I'll go up here, go to indicators, okay, and basically type in the MACD. Now, obviously, you guys can see that I'm using, well, this is the wrong one. No, I don't use this. Hold on. Let me remove this. And here we go. It's just a regular MACD. So you can see this is how it looks when you're using TradingView. You can see that it has a histogram here, this blue line, and this orange line. So I don't really use it this way. I kind of customize it to what I can understand. So, but if you guys want to follow along, this is what I do. So I go into the settings, I know it's 12.26.9 is the default. I changed this to an even number, 12.24, and for signal smoothing, I change it to 3. Okay. Now you can see the lines get a little more narrower. I'm not looking for crossovers, so to me that doesn't matter. What I'm looking for is divergences, negative divergences, also known as bearish divergences, or divergences going up, which is bullish divergences. I also don't really rely on the histogram here. So again, I go back into the settings, and the histogram lines, I change this all to light gray. This one here, I change this one to light gray, and this one to light gray. Okay, and the MACD, I like a dark blue color and a dark red color. That's how I have the MACD set up. Now the MACD alone, one of the biggest arguments when it comes to the MACD or indicators is that the MACD, divergences don't work. Now I'm going to tell you from experience that that's an absolute lie, because the MACD divergences are probably one of the most strongest signals that you could have in trading. I mean, there's just no question about it. But they have to be combined with a certain method. And to me, there's no better 1-2 combo than a MACD plus chart patterns. Now, I'll show you some examples of what I'm talking about. And I have to go all the way back because I'm going to show you not just the Euro USD, but I'm also going to show you some other charts that I've used for MACD divergences. Okay. The most obvious pattern is a rising wedge or a bearish wedge. No, I'm going to do a separate video on the wedges, because that's exactly what I use. That's something I've been using for many years, and hands down, one of the most powerful combos in trading. So the thing is, you have to be able to spot the patterns. And again, I'm going to make a video on that at another time. But let's say you don't have the MACD here, okay, and we draw a wedge. Now I remember this. I drew this out, and this is another thing that I was talking about on the other video for trend lines, of how to get in short and the reason why I wanted to go short. Okay, so we draw this trend line here. Now always remember, trend lines are not textbook. I know some people are like, oh, well, it doesn't look like, the price went out of the line a little bit. As long as it's not excessive. If it's excessive, then you might have to rethink the pattern, right? But just always remember, maybe for a handful of times you're going to have a chart pattern that's going to be textbook, and that's something that I really don't fully agree on when people show like a perfect examples. Now don't get me wrong, it's not bad, but when they show you a perfect triangle or a perfect wedge or a perfect descending triangle or whatever the case is, sometimes it's not going to be that perfect. You have to train your eye to be able to see it and draw it out, to be able to take advantage of it, to see what other people don't see, basically. So anyway, in this case, we have this this trend line going up, and then we can draw this here. Say, okay, it looks narrow up here. Let me see where this connects. Okay, it doesn't have to connect perfectly, but we're going to choose this level as our wedge. How big this move is down is going to be, again, just imagine this doesn't exist yet, or I could use the replay tool. Okay, you're looking short. Now, if you want confirmation that this market's going to go a lot lower, you can always look down to the MACD. Okay, and the MACD will tell you. The chart tells you that the market's losing momentum. But if we start drawing divergences to the downside, okay, this is a very high probability trade. These are the type of trades that you want. Again, I emphasize more on swing trading, so we're looking for big moves in the market. Okay, but this is on the daily chart. Sometimes if the market's not so clear on the daily chart, you'll have to go up to the weekly. So let's take a look at the weekly. Okay, let's go back. Now again, you won't be able to really see divergence here because basically there is no divergence on the weekly chart, right? See over here, there's no clear divergence going on the weekly chart, but the pattern is still there. So if I were to draw this pattern out on the weekly chart, let me get the right tool here. Okay, and you can see that the pattern is still present there. It's still valid, right? But there's no divergence. So, but on the daily chart, that'll be our indication to start looking for shorts. And of course, obviously, everything's hindsight 2020, right? But this is the result of, you know, the divergence is giving you a heads up. Now let's take a look at some more clear examples on the Euro USD. I'm trying to remember the trades that I took myself that gave me kind of like a heads up that this market was going to turn around, or kind of give me an indication that the market was going to start making a top or a bottom. Now this is another one here. Okay, we take this here. Now this one is not really a wedge. There's no wedge here. But again, if you study broadening patterns or expanding wedges, you will see that there is one here. Okay. Forgot what video it was, but I mentioned that usually the price starts very narrow at the base and it starts expanding. The trend lines start expanding out, which starts indicating some weakness. Now, the way we validate that is through the MACD. This high up here and this low here, or this lower high. Okay. Once this market starts getting weaker, we can start looking for shorts and start looking for the next support or previous resistance levels to get out of the trade. Unless you have a longer term perspective, then you can stay in the trade, or at least ride it with a by lowering your stop or a trailing stop. Right, that's one example here. So we'll remove this. Take a look at some other trades that I've taken in the past. Okay, here's another one. Okay, this is an expanding wedge or megaphone pattern. Okay, this starts out narrow. Right there, you see how the trend line starts spreading outward, and that's bullish. Now, again, I'll emphasize that this pattern is extremely powerful. I think this pattern is actually even more powerful than a standard wedge, and I think the reason is most people can't really tell. It's hard to really spot a pattern like this, but this is why I recommended the Encyclopedia of Chart Patterns. You guys can buy that book on Amazon, and you can study how the performance of these trades or these patterns. It's a very good book that you guys should pick up. But again, this is a broadening pattern. It spreads out, and you can see the divergence down here. This is actually in the way a little bit, but it can start giving an indication that this market could turn around and start making a run, which obviously it did. A tremendous run, actually, to make higher highs than this here. Okay, I'll show you one more example on the Euro USD, and I'll try to find one that I actually took a while back. Actually, this is probably one of the most powerful trades that I've seen. Sometimes huge trades show up maybe like once or twice a year. Sometimes you'll see over the course of 2 to 3 years major chart patterns or trades that give you an indication that it's an opportunity to make a lot of money. And this was one of them. So I would have to go to the weekly chart for this one. And you can see all the way back here. Now I don't remember exactly what my target was, but I think it was somewhere down here because this was a major level if we looked all the way back in this zone, right? This here support here, strong support for many years. I think over the course of almost 10 years. But this was another example of the combination between the MACD and chart pattern. Okay, here and here. And you can see if I draw the divergences. Okay, obviously it was a slow grind to the upside, but this gave you an indication what was coming ahead, right? For at least for the next year. And you can ride the trend, or you can ride the trade and on the daily chart and ride it as far down as you can go. Again, you can use a trailing stop, or you can use just a normal stop loss, and just keep adjusting your stop. Obviously, the market's going to trend up and down, and it's going to fluctuate. So this doesn't happen all the time, where the market, let's say you got short here and the market just goes straight down with like no pullback, no type of consolidation. It just drops rapidly. And these are the trades that make the big money. Obviously, we don't know how deep and how far the market can go, but you can use kind of like a previous support or a previous resistance to try to gauge where you want to get out, or what the market's trying to do, or where it's likely to bounce or stall. Okay, so this is the Euro USD. Let's take some other look at other examples in the British pound USD. Okay, let me go back to a daily. There was actually a recent trade I was looking at. I think this was one of them. Okay, it was here. Now again, I didn't take this trade, but the opportunity there for, if you trade the pound dollar, you can see the opportunity here. Well, let me go back and redraw this other trend line that I use. Okay. You can say this is our trend line here. And maybe a trend line here. This is more of a channel, not really a wedge. Some people might consider it a wedge. I really don't, because it looks more like a channel to me, right? But if we have the MACD, for those that are looking at support and resistance levels, you can see this was the last high. After that break, it made a run all the way back up to this zone. And if it's up here in the zone, you may be thinking, well, I don't know, it's a previous resistance. Should I take a short? Is this a high probability trade? And if you look down at the MACD, you can see that it increases the probability of this market going to the downside. Okay, and then you can target, if this is your style of trading, you can target this zone right over here, which looks like it's close, getting to this previous support level. Okay, but to get short here, some people feel a little, they're not really clear if they should take this trade, and the MACD helps tremendously in making those decisions and getting into the market and kind of like mitigating your risk. Okay, you have your stop loss up here. This looks like it's going to hit another resistance zone, and then the MACD helps tremendously to get into the trade, increasing your confidence. It's not going to happen. It's not going to be perfect all the time, but again, divergences on the MACD help tremendously. All right, let's look at another example. Let's look at the Japanese yen, or the US dollar against the Japanese yen. Now this was a nice move to the upside. I don't know how many pips this is. I was eyeing this trade, but again, I was looking more at the Euro USD because I trade that about 90% of the time. But this was a decent 600 pip move, okay, to the upside. Don't know how far it's going to head up to the upside, but you can see this kind of gives indication that this market was bottoming out right over here. And if I draw this wedge over here, okay, Okay, here we go. You can see there's a wedge over here. Okay, it doesn't have to be perfect again, but still, you can see that the market's getting narrow over here. So let's say you want to get long. Okay, you're like, all right, I'm looking for a long. I'm not sure if this market's going to go up, it's going to pull back, or what it's going to do. That's when the MACD comes in and it gives you that confidence to get into that trade and say, okay, there's divergence there. The probability of this market going up is more in my favor than not, right? So this was a nice trade. I didn't take this trade, but again, the combination of chart patterns and divergences work extremely well once you put it in practice. Now, it doesn't only work here in the Forex market. From time to time, I'll look at, I will trade options. I've done very well. I only trade if I see a great opportunity, and I'll show you guys that what trades and what I look at when it comes to options. Now, if you're a Forex trader, this might not interest you, but it's just the fact that using the combination of chart patterns and MACD divergences, it really helps to increase that confidence in your trading decisions. So we'll look at that now. All right, so here we go. Here's a chart of TQQQ. Actually, I was just looking at this the other day, but if I want to go to QQQ, you can see I actually already have this drawn out on the chart. This is a weekly chart, but if I go to the daily, it's just a zoomed out version of this wedge, and you can see how this works out really well. Now you can see in the bottom here, it's not so clear. It is divergent to the upside, but sometimes I don't want to see on the MACD multiple lows and highs, and then it comes back down. Even though it's making a higher low than this low here, I still want to see a more clean type of smoothed out divergence. So if I look on the weekly chart, that gives us this that smoothed out version. If you guys are not familiar with this charting platform, I use something called TC2000. I prefer this over TradingView when I'm trading stocks or I'm trading options. It has something called an easy scan, and this it automatically scans the market for MACD divergences, so I don't have to look through a ton of different things. It just calculates it for me, and basically all I have to do is look through a bunch of symbols, and then I see which one has the best setup or the best probability, right? These days I don't really look through so many different stocks. What I'll do is I'll only stick to ETFs. I'm a big believer in simplicity when it comes to trading. So that's why for Forex, I only stick mainly about 90 to 95% of the time on the Euro USD. I just focus on that. And then if I see opportunities in the stock market, I will look to trade ETFs only and just filter through ETFs and look for the opportunities there. So this is just a regular chart here. You can see QQQ, and there's a tool that I actually really like on this platform. If I just zoom back, okay, I take the absolute bottom here to the top, something called quad lines, which automatically gives me kind of like a Fibonacci, 25%, 50%, 75%, and 100%. And all I have to do is just drag that out. Hopefully you guys can see this, and it just plots these levels for me, and you can see some of them get respected. So it kind of gives me a view of where the market might find resistance or support, but mainly I like to look at right over here the chart patterns and also divergences on the MACD. Let's take a look at something else. I was looking at the SPY. Okay, you can see I already have these quad lines plotted on, but I already see this on the weekly chart. I see one of those expanding wedges. You can see if I draw it out here, and I draw it out right over here. Okay, they expand out, and this expanding wedge is not so deep, but still works pretty well, especially if we're looking to buy somewhere down here or on the pullback. You can see the divergence playing out right over here. Okay, So that gives us an indication that this is a bullish pattern. Now I need more confirmation to be able to get into this trade. The MACD says that there's potential bullish divergence. So that gives me confidence to take the trade, and then I'll move over to a daily time frame to try to find optimal levels or zones for me to get into the trade. Okay, so that's pretty much what I'm look at on the MACD and in the charts. Now, if I go back to the Euro USD, let me take a look all the way back here. We actually had divergence late on recent price action. So if I take this divergence tool, and you can see how this market was diverged to the downside, and you can see high over here and the higher high. So how deep is this market going to go? Right, that's to be determined. But again, every week I do a weekly recap of the Euro USD, what I'm looking at. I'm currently in a trade right now, still holding from 1.0788, and I'm looking to target a little below 1.06. So this was a good indication of a divergence, also coupled with a rising wedge, and I can draw that out for you right now. Okay, here's the wedge over here, and here's the wedge over here. Now, once this broke higher, this candle, okay, I thought we were going to continue higher, but obviously, this was during FOMC, or the day before it, and the market just got creamed. But again, I didn't want to get too crazy on the upside on positions, because this right here, this was my warning. The MACD was warning me that, hey, you got to, oops, excuse me. The MACD was warning me that this thing could turn around very quickly, because the MACD was diverging to the downside. Okay, so if you're looking at this pattern again, coupled with divergence on the MACD, it's always going to be an incredibly powerful indicator, and it's the only indicator if you're looking to trade, and number one, it's very important for you to be very simplistic in your trading. That's like, I can't tell you how important that is. You have to simplify your trading. Now, if you look at my other videos, I'm using just basic trend lines, not in the traditional way, but I'm using trend lines in a unique way that really works well for entries and exits. And then I combine that with MACD divergences. People usually have, they have like 3 different indicators. They'll have, stochastics coupled with moving averages, and so much shit on the chart that you really don't understand what you're doing. You have to really understand the tool that you're working with. Now, I'm a big fan of the MACD. Again, I believe it's the most powerful indicator you can use, or the best indicator you can use to kind of predict where the market might turn or where the market might bottom out. But again, it's just a tool that you need to use, in addition to other things. But what I've seen, and again, I've experienced this because I understand where they're coming from, is that trying to find that perfect indicator that gives them everything that they want to know. For example, if I combine the stochastics with an RSI, and it breaks down below moving averages, or whatever moving averages you use, whether it's a 10 or it's a 20, a 21, a 50, a simple moving average, an exponential moving average, it doesn't matter. You have to find one or max 2 tools, okay, that really simplify your trading, and it gets you to a point where your screen or your chart is not cluttered with a bunch of different stuff. That's extremely important. And I feel that the MACD is one of those indicators that really simplify your trading. If there's no divergence or something is not clear, you just don't take the trade. Now, if you're looking for very high probability trades, the MACD will give you that. Now, it's not going to give you a trading signal all the time. Like, being patient in the market is extremely crucial to your trading success. So by having just one, one indicator, in this case the MACD, and you're looking only for divergences, that's it. That will help you a huge amount in your trading and your trading results. So again, simplify your trading. And again, what I was going to say, the best part about the MACD is that this is not a customized MACD. I know some people like to use a different variations of the MACD. They like looking at, for example, there's a fast moving MACD, or a three moving average MACD. I've seen all kinds of different variations for the MACD over the course of the years, and I tried so many different ones, and it just left me more confused. Once I said, okay, I'm going to use this standard MACD, and it works perfectly fine. The best thing about it is that, let's say, God forbid, something happened to TradingView, you couldn't access the chart, you had to use some other, charting platform or whatever the case was. You can easily go to that other platform, and you don't need a special indicator, or it is just a standard indicator that you can use on any chart platform. So that's one of the benefits of also simplifying your charts, is that you can take this indicator anywhere. You can use any chart, whether you're using MT4, or you're using the MACD on TradingView, or you're using any other trading station, or any type of other charting platform. The MACD is like a staple on most, if not all, charting platforms. So that's going to be it for this video. The next video I'm going to make is probably going to be an extremely important video when it comes to support and resistance. It's not in the traditional way that everybody uses it, but I can guarantee you that, again, everything I'm showing you, from the videos with trend lines, from this video with the MACD, it's all going to come together, and you guys can be able to look at those videos and really kind of get a feel for how to design maybe a trading strategy for yourself that can make you a ton of money. I can almost guarantee it, because it has helped me a tremendous amount, and I just use the basic tools offered here on the platform of TradingView. All right, so with that said, guys, please don't forget to like and subscribe. It really helps the channel, and it makes me want to create better content for Internal Trader. You guys can check me out over on internaltrader.com, or you can check me out, or if you want to reach me and contact me, you can also contact me at support@internaltrader.com. So with that said, this is going to wrap up this video, and I hope you guys study what I'm trying to tell you or try to show you over the course of many years of the experience I've had to really help you guys simplify your trading and increase your trading results. So I'll see you guys in the next video. Most likely we'll do a video tomorrow about the end of week recap for the Euro USD and the Forex market and what's ahead. So with that said, guys, have a good night and take care.